Please take notes. While trading can be rewarding, it comes with high level of risk and you can lose all your funds. And also note that videos on this channel are for educational purposes only. None is intended as investment advice. Please do your own research and also consult your financial advisor if you need one. Thank you. All right, you're welcome back. And in this video now, we are going to be talking about lesson 1.6, still on module 1, technical analysis in Forex trading. So the big question, what is technical analysis? Technical analysis involves analyzing historical price data and trading volume to forecast future price movement. Two things here, historical price data and trading volume. Pay attention to that. It relies on charts and various indicators rather than fundamental factors. So after fundamental analysis, come back to your charts. Check what has happened in history, because whatever happens in the fundamental, whatever the why in the fundamental landscape, they are played out, they are factored into the charts. So I can go back to a certain day in 2005, all right, and pick the charts for that day and check the calendar for that day and news for that day and see how the market reacted to whatever events. All right, let me not go further than that. Okay. Price charts are the primary tools for technical analysis, and the most common types of price charts include the line charts, which are simple charts that connect closing prices over a period of time, just one single line that runs up and down like that. Then you have bar charts, which show open, high, low, close, and what did I say? High, low, close, high, low, and close. Oh, it shows open, high, low, and close, right? Okay, for a specific time frame. So when you pick a time frame, either 1 minute, 5 minutes, 10 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, daily, monthly, weekly, and so on, you always see open, high, low, and close prices for each of these bars on the time frame. Then you have candlestick charts. They are similar to bar charts, but they provide more visual detail, showing the open, high, low, and close prices with colored candles to indicate price movement direction. Beyond that too, candlesticks also form patterns, as an individual candlesticks can form patterns besides the collective patterns that charts can form. You know that collectively charts, whether it's line charts, bar charts, or candlesticks, they form patterns, collective patterns, all right? But then in the candlesticks could individually give patterns, and one candle can have a whole lot of meaning. That's why candlesticks is our preferred type of chart. Okay, now trends. Have you heard the word before? The trend is your friend. Yeah, you will always hear it in trading. The trend is your friend, and identifying trends is crucial in technical analysis. Trends can be either uptrend, for where you have or the market experiences higher highs and higher lows, or is downtrend where the market is experiencing lower lows and um, lower highs, yes, lower lows and lower highs, or lower highs and lower lows, whichever one, right? Then you have sideways trend. Of course, is a no trend. Here, prices move within a horizontal range before a breakout occurs. Traders often use trend lines to visualize and confirm trends. All of these you are going to learn by the time we head on to the trading platforms, whether you're using your smartphone or you're using your desktop, because I'm going to be, taking you on both the MT4 platform, MT5 platform, and of course your smartphone, both MT4 and MT5 on smartphone. All right. These are not broker specific platforms, okay, but then you can actually connect any broker to them. Now, support and resistance levels, very, very crucial, very, very important, because you see price going up, and it gets to a certain height and it bounces back down and then falls to a certain low and bounces back up. These two levels form the support and resistance levels. You can say that support and resistance levels are levels on price charts where price reacts And that reaction provides opportunities to either enter or exit trades. I repeat, support and resistance levels are levels on price charts where prices react. And these reactions at these support and resistance levels provide opportunities for either entering or exiting trades. So we'll quickly deal with support level now. Support level is a price level where buying interest is strong enough to prevent the price from falling further. So when buyers gather more at a particular low level, price has been falling, and then they gather and say, well, you are falling, so far you are falling, you fall no more. Let me just give you an interesting story that you may connect with. A few weeks ago, in the month of March 2025, on Twitter, some guys tweeted that there was some fellow who is who claims to be an insider, all right, to the president's kitchen. Let me use that. I'm managing my words here. So, and that from what he knew, that Bitcoin was going to drop down to either 70,000 or 72,000, somewhere around that. So he had already betted his investment on sell. Okay, so these guys tweeted that they wanted to punish that fellow that claimed to be an insider. So they have seen his position, and they had calculated that if Bitcoin should rise, by then Bitcoin was around 77, 78,000. So they said if Bitcoin should rise to 86,000, that this guy will be stopped out. Guess what? They began to make calls on Twitter that who was ready to join them to push Bitcoin price up. And so guess what? They gathered and became buyers that said, well, so low have you fallen Bitcoin, you fall no further. And they began to pump in money, buying Bitcoin. And guess what? Bitcoin price was pushed to around $87, $88 within about a week or two. So do you understand that now? So at a support level, buyers could gather and they say, well, you have fallen enough. There's buying interest now. You can't fall any further. Start rising. I hope that helps you to understand support level. Now, resistance level, just the opposite. A price level where selling interest is strong enough to prevent the price from rising further. These levels can help traders identify potential entry and exit points. Now, let's quickly look at technical indicators. Traders use various technical indicators to analyze price movements and trends. Some popular indicators include moving averages, used a lot, and they help smooth out price data to identify trends over a specific period. Still a moving average, usually to use it to determine trend, we will deal with this still when we get into the practice section. Whenever price is above the moving average, all right, irrespective of whatever period is covering, you say is an uptrend. When it's below the moving average, it's a downtrend. And when they are par, it's a sideways trend. Simple. Relative Strength Index. Relative Strength Index measures, or RSI, measures the speed and change of price movements to identify overbought or oversold conditions. Now, MAC, the moving average convergence divergence, shows the relationship between two moving averages of a securities price, whether it's Forex, crypto or metal, helping to identify potential buy and sell signals. Chart patterns. Traders also look for specific chart patterns that can indicate future price movements, such as head and shoulders. Now, head and shoulders pattern indicates the potential reversal in trend. It consists of three peaks. You have a higher peak, which is usually in the middle, all right, as a head. Then in between them, you have in between the head, uh, the head is in between. Okay, the head is in between two lower peaks, which are called the shoulders. All right, so the head and the shoulders. So that's why you have head and shoulders. So you can have head and shoulders. You can also have inverse head and shoulders. We'll learn that as you progress in your journey. we may not cover this particular one in the practicals, because if we don't want you to chew too much. Okay, but just get to know about them, and as you progress in your journey, you come to them. Maybe by the time you go for intermediate or the what do you call it, the advanced courses. So an inverse head and shoulder pattern signals a potential bullish reversal. Okay, so that's just that. Now you also have double tops and bottoms. So we'll be learning this double tops and bottoms. Double tops are bearish reversal patterns which occur after an uptrend and consist of two peaks at roughly the same price level. They don't have to be together. Okay, it can be maybe 3 hours ago, 5 hours later. Do you understand? So you just see, oh, there's a 1.200 somewhere there, and there's another 1.200 somewhere around there. Okay. Then this suggests that the price may reverse downward after reaching the resistance level. So because where it was rejected, that formed that double top become resistance level. Okay. Double bottom is the bullish reversal pattern that occurs after a downward trend, a downtrend, and consists of two troughs at roughly the same price level, just the opposite of double top. And this indicates that price may reverse upward after hitting the support level. Triangles. So these patterns can indicate continuation or reversal depending on the breakout direction. Now there are three main types of triangles. You have ascending triangles are typically a bullish pattern formed by a horizontal resistance line and an upward sloping support line. Then you have descending triangles, which typically are a bearish pattern formed by a horizontal support line and a downward sloping resistance line. Then you have symmetrical triangle. Now symmetrical triangles indicate indecision. Okay, so don't worry, you'll see them later on. Okay, they represent indecision in the market with converging trend lines. The breakout direction can either be bullish or bearish. And now you have flags and pennants. Flags and pennants are short-term continuation patterns that indicate a brief consolidation before the previous trend resumes. So you need to learn. So in fact, even as a beginner, by the time you see how flags and pennants look, spend time memorizing it and train your mind to recognize it on charts. That way, even if you miss a trend and you just notice flags and pennants on any time frame at all, just know that there is a higher probability that the trend will resume. All right. So flags are rectangular shaped while pennants are triangular. Then you have cup and handle. Cup and handle is a bullish continuation pattern that resembles a cup with a handle. The cup is a rounded bottom followed by a consolidation period. The handle before a breakout to the upside. So you see these chart patterns, you need to create time to study them because you will need them sometime along the line. All right, so let's quickly summarize. In summary, technical analysis focuses on historical price data and trading volume to predict future price movements. Price charts, including trend line, bar, and candlestick charts, are essential tools for analysis. Identifying trends, support, and resistance levels, and using technical indicators are key components of technical analysis. Chart patterns such as head and shoulders, double tops and double bottom, triangles, flags, pennants, and cup and handle provide insights into potential price movements, and it's important that you learn these things as you progress in your trading journey. Risk disclosure. Once again, all materials they have been presented with here are strictly for educational purposes. None of them is intended as investment advice. So whatever you put into the market is at your own risk. Be wise. Thank you very much and see you in the next video. Thank you and God bless you.